What's up? My name is Benjamin, owner of Forex Hermes. Welcome to the YouTube channel. Leave a like on this video, subscribe down below, and comment what you want to see next. But today we are doing another analysis video. And if you're new to the channel and don't know why I'm only looking at the EURUSD and GBPUSD, it's because firstly, it's more time efficient for me. I don't want to go through all of these currency pairs. I mean, I love y'all, I respect y'all, I appreciate all the support, but I don't go through all the currencies on my own even. So why should I do it, for YouTube? I might do that like in a live stream maybe one day, but for now we're only looking at these two currency pairs. Plus, I feel like a lot of us have these currency pairs in common, from the people that I've talked to. There are people that are contrarian traders, trend traders, consolidation traders, and they all have this one pair in common, which is either pound USD or euro USD or even both. Personally, I trade the pound USD and I ride or die for the pound USD. It just moves better than, the euro USD. But anyways, I'm gonna go through that right now. Let's go to the pound USD first, because I can talk more about that. So, this week was absolute hell if you want to get into a new position on pound USD, because pound USD made a full 180 when the week started. I was not expecting that. I expected price to go below the support level of 1.23322. I was expecting that to happen, but it did not. What really happened is that it went all the way up and then it reversed again, broke the support, which was previously resistance, and now it's back at our support of 1.23322. all right, now to be honest, I have three different ideas, or two actually different ideas of what could happen right now. Idea number one is that we break this support level, right? And we get in on the retracement, because I normally get in when the price retests the support or resistance level that was just broken, all right? That's me. I don't just normally get in because I like my positions to be more safe and to give me the best risk reward ratio, right? So let me go to a lower time frame. You won't be able to see it because you are looking at a screenshot. I'm on the 1 hourly time frame right now. Nothing's really happening there. Okay, so all of these time frames are bearish. Let's actually go to the daily. I've never looked at the daily. So on the daily we are above the Kumo cloud, right? But I don't normally look at the daily, so I'm not going to look at the daily right now, because 4 hourly is what I normally use, and I've been doing very good with the 4 hourly. So right now I'm looking for a push to the downside. All right, that's number one, scenario number one, right? And I enter on the retest. Okay, number two is price might decide to go back up to that resistance, so I might go to the 1 hour and see what could possibly happen over there, or the 30-minute to see if I can enter, so this week, the beginning of, the week that just ended, I could have gotten in on the 30-minute time frame to grab a good, 60 or 100, pips, depending on where I got out, but personally, I am not a trader that chases trades. I am a trader that just reads the market and gets in when he feels like it's the time to get in. All right, so you'll never see me saying that, okay, this isn't working, so let's try something else. I stay true to my trading scenarios or my trading systems, and it's been working. That's why I've only been sticking to the Ichimoku. I've been trading the Ichimoku for quite some time now. I unlocked, not really see the secrets, but I unlocked what I was missing, and obviously I'm trying to get you also educated on the Ichimoku. That's why I'm still trying to record that long series about the whole Ichimoku. All right, so without further ado, let's get into the second scenario. I actually already went through the second scenario. I forgot about that. Yeah. So the second scenario is just me taking a short-term trade on the 50-minute or the 1 hour time frame, catching a few pips. And by a few pips, I mean like 60, 100 pips, because 60 pips ain't bad, but like, say for instance, you're like me and you risk like, 100, like dollars, per trade. I'm just making an example, by the way. And that's like 1% of your, capital. When you get those 60 pips, that's a good, times 6. So that 100 is going to become 600, so that's a very good investment, to be honest, but it's way better when you have, a 1 to 20, which is, I think, what I got from this. Yeah, so I ended at about like 1.25522, around that level, not exactly at that level, but around that level. And when I saw price was reversing and when the Seiko span A, B, and the Kijun were flat, I got out immediately. It was about like, I think 200 pips or 190 pips, around there, right? So that's way better because you take in that $100 and now you're making it 2,000. That's the beauty of the Ichimoku, to be honest, and I love it for that. So we're looking for another entry. All right. In the previous video, I did have another level below the support. So go back to that level to look at the other level, but from the support to that other support, that's like 116 pips. So that's a good amount of pips, if you get in at the right moment. And if you do scale in, you're definitely helping yourself, That's pretty much my, look on the pound USD. Definitely looking for the break to the lower side or to the downside. But if it does go up, I'll be prepared for that as well. So let's go to the Euro USD. Euro USD was a pain in the ass. All right, I said this, I think, on the Discord server. It is an absolute pain in the ass because look, all right, it broke that level. It broke the 1.11875 level, right? That was my support. That was the level that I was looking at for it to break. It broke the level, but it was a fake out. And that really kind of, ticks me off. But there's nothing you can do about it, to be honest. Nothing you can do about it at all. So right now it's consolidating. But as I eyeball this chart right now for the first time today, because I made the analysis at about, I think, 2 a.m. Today. Which is actually a Saturday, but I release these videos on Sundays. But yeah, as I said, so I made this analysis 2 a.m., right? And then I sent it to the Discord group at like 2 a.m. around there, my time, by the way. So at that point, I didn't even see the descending triangle. Now, I don't trade triangles, all right? I know people who trade triangles religiously, but I don't do that. I don't trade it because I never needed to. And I just stick with my normal levels, my support and my resistance, and that's it, all right, with my Ichimoku. Now I see the descending triangle, and that confluence for me to say that, okay, it's still going to continue bearish, it might be moving very, very slow, but it's going to continue bearish, hopefully, because normally what happens with descending triangles is it breaks to the downside, because it squeezes price, or like it looks like the price is getting squeezed, and the price needs to break down. And most of the time it does break down, but there is some times where it breaks the descending triangle going up, and that sometimes happens. But for the most part, I'm seeing this as a descending triangle, and descending triangle, with the chance of breaking that support of 1.1875, right? Once that support is broken, wait for the retest and then enter. You'll be gaining about 190 pips, with your USD, it moves slow, so you can have like a 10 pip, stop loss. Let me just actually double check before I'm just, talking some lies. So I'm gonna scroll back real quick just to kind of see what's the general amount of pips for stop loss, because I don't normally trade the Euro USD like that. So let's see, boom. Yeah, you could get a good 10 pip stop loss, even maybe 8 pips, which is very, very tight. So you have to look at your spread as well, by the way. But anyways, so that's pretty much my look on the Euro USD. Even though right now it's giving me some chest pains, I definitely do see this as a bearish market still. However, if it does go to the upside and it does look convincing, I'll change my perspective. The point about the Ichimoku is not to be right, it's to read the market for what it is saying right now. Right now the market is kind of indecisive, it's kind of just moving sideways and there's nothing really happening. For a trend trader like me, it's absolute hell, you know, but luckily I don't just stick with the pound USD and the euro USD. I have my own currency pairs that I look at, you know, and I tell, you know, the premium members of Forex Hermes, you know, what those are and how I trade those as well, you know, so that's pretty much what's up, you know. So yeah, that's all from me. Hopefully I'll be able to get that Ichimoku series out very, very soon. But yeah, that's all from me, Benjamin, owner of Forex Hermes. Hope you're having a great day. Hope you're having a great Sunday. And I hope you are ready to attack the market on Monday. Well, don't trade on Mondays, right? I don't feel like Mondays are the best days to trade. You know, most of my losses have happened on Mondays, so I don't even trade Mondays anymore. I just look at what the market is telling me, and then, you know, I just pretty much trade. But that's all from me. Hope you're having a great day. It is your boy Benjamin from Forex Hermes. Leave a like on this video, subscribe, tell me what you want to see next. Your opinion matters. And yeah, that's all from me.